Hey everyone, I hope you're all doing well out there. This is your February market review. The reason that I put these videos together each month is to get you the straightforward information with no media spin, political angle, or fear tactics that many media outlets use to get more viewers to watch their shows. My goal with this is to just give you information about what's going on in the stock market and the economy, and then ultimately how that affects your money. So stocks this past month were down across the board. The S&P 500 was down about 3.5–4%. The NASDAQ 100, which is a lot of your major technology companies, was down about 7%. Small cap stocks, though, were roughly about flat. The big news shaking the markets here over the last couple weeks are obviously the ongoing Ukraine-Russia conflict. So the first chart that I have that I'm going to go over, so those of you that haven't seen these before, what I do with the market reviews is I like using charts to talk about major events going on or just different things that I think are important for you to know about. So I have 3 charts for us today to go over. The first one is a geopolitical events chart that shows the different market events that, or the different geopolitical events from more recently the U.S. pulling out of Afghanistan all the way going back to the Pearl Harbor attacks in 1941, and it shows then the date of that event, the one-day movement of the stock market or the S&P 500, that total drawdown as far as how far it went from the date of that initial event, and then what percentage it dropped off to where it then bottomed out at, shows the amount of days and then the days that it took to recover. So the days to bottom, the days to recover. So most events that happen, geopolitical events, basically like things that are happening right now in Ukraine, those events as a whole generally aren't the time to sell, they're more the time to buy. So with the outlier being more so like the Pearl Harbor attacks. So that was, definitely a rough go of it for about a year, really. So it took about 307 days for the market to recover. That was a 20% drop from the date of the initial attack to where it then the market bottomed out at, and then there was a rebound there from that. So outside of that, that was probably the most extreme event. But I thought this was a really interesting chart to kind of put things in perspective of what's going on out there in the world and the economy, and really how those things affect your money. So the media does a great job of articulating the fear of everything going on, which obviously for anybody that's in Ukraine is drastic. So when it comes to investing, though, the stock market, at least in the US, isn't negatively affected the way that you would probably think based on what the media is going to portray out there. So that was something I thought was a very interesting chart. Even some like events here like 9/11, where the market that day, the stock market the New York Stock Exchange closed on 9/11 after the attacks on the towers. The market was down that day about 5%. The total drawdown for that was 11%, and it took about 31 days for the market to recover from that. We were actually in a recession at that point too, so that was surprising when I looked at this that it actually wasn't more. I just assumed, looking back at it, that was going to be a bigger drop off, and it really wasn't. The other bigger one in there was the Iraq's invasion of Kuwait. So in 1990, at that point, we were also in a recession at that point, and that was actually the previous recession to the 2001 recession, and that was a 17% drop, and that took about a year or half a year for the market to recover from that. Now, was that as much to do with the invasion in Kuwait, or more to do with the fact that we were in a recession at that point? So that's looking back on it, probably they both had some degree to it, but most of these events on here, outside of the ones where we're already in recessions, were not that big of, from a long-term standpoint, didn't take that long for markets to recover, and weren't really that big of drops overall. So there, generally speaking, was a bigger buying point. So moving on, the next chart I have is a more economic-based chart. So This is showing the initial jobless claims on a weekly basis going back through the beginning of 2021. So the average from 2019 is in the dotted line right around 200,000, which is right where we've been for about the last 3-4 months or so. That's a great sign, meaning that there's not as many people getting let go and that the jobs market is doing really, really well. So that's a sign that's getting back basically to how it was pre-COVID. So that's kind of an ideal spot to be at. How that ties into your money is that these companies out there that are, the stocks and things that you're invested through, they're not looking to lay people off, obviously shown on this chart here, but what they're looking to do is actually hire people. So they're on the flip side now where they're actually potentially having to pay more to attract talent, which is great for those people that are getting hired. Costs more for the companies, but those companies are able to pass that through in most cases to the end consumer for whatever their product or service is. So that's actually driving up stock prices here. So even with, yes, there's been a pullback here in the beginning part of the year, but again, I look at this as a buying point for anybody that's investing or looking to invest new money. And if anything, if you're thinking about becoming more aggressive, remember you want to do that not when the market's at a peak. You'd rather do that when the market's pulled back a little bit. So that's a great opportunity for anybody out there that was considering that or wanted to talk to me more about that. Now would be a better time to do that than 2 months ago when the market was at an all-time high. So the last chart that I had is a chart showing the inflation cycles here. So, right now, and this goes back years, obviously, the inflation goes through these waves, and markets as a whole go through waves. This is actually what would be called technical analysis, looking at charts and patterns. And you can see we're kind of at peak inflation right now, and likely the inflation numbers will start dropping off as the economy gets its footing back from COVID, and things like supply chain issues get worked out, and the jobs market and everything is worked out and back to a more smooth running system like it was pre-COVID. So it wouldn't surprise me with the more recent increases here with inflation going up above 7% to see by the end of the year that number start to really drop off to where it's maybe 3-4% by the end of the year, because the other aspect that will probably drive inflation down is that the Federal Reserve announced today, March 2nd, that they are going to raise interest rates here later this month, despite any Ukraine-Russia effects on the economy, because they don't know yet what that will end up doing as far as economic impact for the United States. So, but those are just a few charts that I came across here this past month that I thought would be interesting topics to go over with you all. If you'd like to schedule a Zoom meeting with me this month, I'm very flexible, obviously via Zoom. If you have any questions, don't ever hesitate to reach out to me. For those of you that I met in September last to do an investment review, your time is coming up where I'm going to be doing your review here in April, or at least for the in-person ones in Pennsylvania. So look for a call from me or email from me here probably towards the end of March. And again, if questions, comments, concerns, call, text, or email me. More than available to answer anything. If you have any friends, family members, coworkers, someone that you feel would benefit from having a conversation with me about their investments or just financial questions that they have, don't hesitate to give them my contact info. I'd be more than happy to have a conversation with them, or if they'd prefer me reach out to them, just get me their contact info that way. Appreciate you all taking the time to check me out. Until next time.